Okay, so guys, let's talk about the smart money concept today. So, the smart money concept. I had the opportunity to speak with some crypto traders today, and that was the topic I was given. So I thought maybe I could share it on my YouTube channel so that you guys can also benefit. So, what is the smart money concept? First of all, to be able to understand the smart money concept, what is the smart money? So, smart money refers to the capital that institutional investors, central banks, and other professional financial institutions control. It is managed by expert investors who can foresee market trends and make most of the profit. So, smart money are basically institutional investors, big chunks of volume, big chunks of money that will come into the market and make impact, like influence the market movement, either going up or down. So basically, the big monies are the big chunks of volume that can cause market movement, either up or down. So the smart money either comes in as a new money to move the market, or it is pulled out of the market to crash the market. So that is the smart money. Now, what is the smart money concept? So basically, the smart money concept is for retail traders. So being able to determine the market bottoms and the tops helps you apply this smart money concept. So basically, what the smart money concept helps you do is that as a retail investor, it helps you to be able to determine basically when big institutions are putting in their money, so that you can also put in your money and invest and make profit, because these institutional investors are like big players that are it's very the probability of them making profit when investing with their money is like prices that they enter. As a retail investor, if you're able to determine these places, and when institutions pulls out their money, if you're able to determine the top at which institutions pull out their money, you'll be able to determine when to get in and get out. That is basically how the smart money concept is applied. So basically, being able to know when to get in at a good time, invest with these big players, and when to pull out your money is very, very important. So the smart money is the cash that is invested with investing professionals who have better informed, and more experience in whatever financial market they are investing in. So it is perceived that this money is invested in the right investment vehicle at the right time, and it will generate highest returns. So either is the crypto market, is the stock market, every kind of financial market. Being able to apply this concept of knowing when the smart money comes into the market helps you apply the smart money concept. So now basically so like the reason we apply the smart money concept is because we believe that being able to determine when these institutional investors comes into the market will help have a greater chance of success, right? So as a retail investors, what we do is that we use certain metrics, certain indicators, certain informations to determine when central banks, institutional investors, hedge funds will come into the market, right? So to be able to identify it and invest at this particular times, being able to know the market bottoms, when to buy and when to sell. If you're able to do this and be successful, then you have successfully applied this smart money concept. Now, the first thing you'll be able to use to determine and apply this smart money concept is when the market crash takes a little bit of consolidation. You see big trading volumes coming in after a fall. So the first thing is, if you see certain trading volumes, which are in millions or billions, you'll be able to see that institutions are trying to get into the market. Just like the Bitcoin average institutional investment price is around 32,000. So we all know that anything around 30K is good, you understand? And this is not a financial advice. This is just for educational and informational purposes only. So being able to determine bigger trading volumes at a particular point and invest at the right time helps you apply the smart money concept. So example, using the relative strength index to determine overbought and oversold areas of a particular asset helps you identify when the smart monies will be coming in and when it will be pulled off. So basically, the smart money concept is applied when you use certain metrics and analytical data to determine when to buy, a good time to buy a particular asset, and when to get out. So being able to know when these big players comes in and when they get out will help every retail investor to invest and make higher returns, just like the institutions will make, right? And if you're able to get this right and apply the smart money concept, it increases your chances of making, huge returns. And that is how the smart money concept works. And so today, just a quick one. I thought I should just share this with you. And if you find value in what I'm sharing, so subscribe to my channel. And so it could encourage us to bring more, stuffs like this to you. So until next time, guys, peace.